Welcome back to another episode of the Full Subjects podcast. We are back. Took a little bit of a hiatus. It happens every spring market. Things kind of putter along, and then there's a couple weeks where things get a little crazy. We start doing some business, which is a good problem to have. It's not as helpful for the podcast and the listeners, but business has been steady. I know Cole was away as well, a little vacation. That doesn't hurt too. But thanks for joining us for another episode. We got our stats podcast coming up today, which is always a good one. Some very interesting nuggets that we've kind of been seeing in the market, as well as obviously what's going on in Canada with job reports. As we're recording this right now, there's a Bank of Canada announcement tomorrow as well, which is I don't think we're expecting any changes, but I'm sure that'll be something that Cole talks about. But yeah, as always, this podcast is for informational purposes only. It doesn't constitute any legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreements. And let's hop right into the Cole's notes, Cole.
Sweet, let's do it, Austin. I'm gonna forewarn everybody today. I've got some congestion going on, so I'm gonna sound a little funny, but that's okay. We'll get the points across nonetheless. So, as Austin said, we'll do the Cole's notes or the market update first and foremost. So, one of the biggest headlines last week, Austin, you probably saw this, is Canada's in a recession and
Technical recession.
Technical recession, and that's really an important note there because the way that they define a recession is 2 consecutive quarters of lack of growth or of a decline in the economy. And when we're talking about that, what we're talking about is GDP. So if GDP declines 2 quarters in a row, technically we're in a recession. That's the dictionary definition. The last time that happened was during COVID-19. We saw it happen. Not a surprise that would happen during COVID-19. But what's really interesting here is a couple things. So the first one is that this came as a surprise because projections were that we'd actually see a 1.5% increase in GDP for the first quarter of 2026. So not only did we not see that increase, we actually saw a decrease. So that was a bit surprising. But what was even more surprising is days after this information came out, we got unemployment data for May. And we added 88,000 jobs in May. That's a lot. That's a lot of jobs. Now, something that is also important to note about that is we've lost over 100,000 jobs in the start of 2026. So from January to April, we'd actually lost over 100,000. So we're not even back up to even, if you will, or back up to where we were to start 2026. But that's quite a significant increase month over month. So that increase resulted in unemployment falling a whole 0.3%, which again is pretty significant. Now, something like this would typically drive rates up, but wage growth has also slowed and oil prices actually did fall as well as a result of this. Now, oil prices are kind of interesting as well because they're all over the place right now. It seems like every day you look at the gas pump or you hear news and you're like, oh, gas is up again, gas is down again, gas is up again. It's really hard to predict what's going to happen with oil prices.
It feels like it fluctuates like 10 to 15 cents a day. Like you watch,
yeah, it's kind of like flip a
it was like under
coin,
$2 one day, and I was like, oh, this is great.
Right. I know, right? You're like, buy it now, and then you're like, wait, is it going to go down more? Should I buy tomorrow? It's crazy right now. But anyways, oil prices did come down a bit, and we also saw wage growth slow. So typically what would have happened is when unemployment goes up is we would see rates go up as well, but those other factors have kept rates actually going down. So we might see some slight changes in fixed rates. And to be honest, since this announcement, we've seen very minimal changes. I would say things have pretty much remained status quo. Another important to note here is that this is the first significant gain in jobs that we've seen since November of 2025. So late 2025 is the last time we saw this increase. And just to reiterate, we've lost over 100,000 jobs prior to this increase. So again, we're still not square if you look at the number of jobs lost compared to what we've actually created. Austin, something you want to add here?
Yeah. Well, we talked about this at our sales meeting today, and how much of those job ads are, seasonal jobs? Where are they being added? Where are some of these being lost? And I'm sure that's something that you're going to segue into because summer's coming up. Are those additional jobs for things like recreation and sports? And, how much of them are part-time versus full-time? So I'll let you talk a little bit about that. So I think that's a really important note because, this isn't necessarily a bunch of businesses that are all of a sudden adding 40 hours of payroll each week. This might be part-time or seasonal. And, with that too, that doesn't necessarily mean that, obviously there's some job losses also kind
Mhm.
of factored into that. So anyway, talk a little bit more about that in detail.
Absolutely. So Austin really took the words out of my mouth. That's where we were going next. So when you think of the post-secondary calendar, and Austin and I can both speak to this, and no, it's seriously in Canada, the post-secondary calendar really is broken into three terms, and really those terms are September to December, January to April, and then May through August. So May to September. So they're broken up into 4 months at a time. So they're broken up into thirds. Why that's relevant is because May marks the first month of more the summer semester, or when a lot of students, post-secondary students, are not in school. So a lot of those students are looking for temporary work through the summer, as well as industries like construction tend to pick up in the summer as well, because it's easier to do work in the summer, or more projects are able to be completed in the summer. So that was a big thing. Construction industry saw the largest increase in employment, and a lot of part-time jobs also came up at that same time. So Austin's absolutely right about that. It makes sense that we're going to see an increase in May. Does it make sense that we saw almost 90,000 jobs in May? That I can't actually answer, but it does make sense that we would see that uptick. So I don't think that's a surprise. I think maybe the magnitude is a bit of a surprise.
Well, and I think with that too, some other things to think of is, maybe businesses are hiring some seasonal
Mhm.
workers. Like if they have, I think it's no secret that typically in the summer, people are taking more vacations, things like that. I know a lot of people as well that their work schedule will adjust in the summer too. Maybe they're going to work a little bit less. Maybe they're not
Mhm.
able to work well, as much or at all when the kids are not in school, because as much as they're there to learn, that is also somebody being responsible for your children. So lots of different factors obviously in that, and people are stepping away from their jobs, their roles often need to get filled, and again sometimes that is with some permanent positions for sure, but sometimes that is seasonal hires as well, or maybe on contract, or etc. So something to think about there.
For sure. One last note on employment, which I thought was interesting. That's why I threw this in here, is people working exclusively from home continue to decrease. So we're seeing more people go back to work. This doesn't necessarily play into an increase in jobs, because those people still held jobs prior when they were working at home. I just thought that was interesting. We're still continuing to see people return to work in some capacity, and I just thought that was something that was kind of interesting to look at there. So
Yeah,
let's talk.
that
Sorry.
that is interesting. Like obviously a lot of people do like kind of working from home because it
Mhm.
is convenient, and maybe you can multitask a little bit, like you're working doing items while maybe tackling some stuff around the house. So obviously it's being in the office is probably a little bit more focused and
Mm.
quite frankly a little bit more monitored. But some people definitely appreciate that flexibility for sure, right? So
Yeah.
cutting down on even things like commute, like if you've got a half hour commute each way, that's an extra hour back in your day. So lots of factors why people obviously like working from home.
For sure. For sure. All right. So the Bank of Canada, Austin already alluded to this, is actually the announcement's tomorrow. It would shock everybody if anything happens. In other words, if we see a rate increase or a rate decrease, it's more likely that things are going to remain the same. And a big reason for that is what's continued to be the reason up until now. And what I'm trying to say is that Canada's stuck in this push and pull. They're stuck between oil prices still being high, even though there's been some decreases at some points, as well as the weak economy. So the high oil prices, why that's relevant is that's inflationary. So technically, in an inflationary environment, there would be an argument to actually raise interest rates. But on the other side, we're technically in a recession. Therefore, the economy is not doing very well. So you might say, well, shouldn't we stimulate the economy by lowering interest rates? So we're really in that kind of push and pull right now of where we should go. So what's going to happen, as I said, is the Bank of Canada is not going to do anything. They're still kind of waiting it out and waiting to see. They're getting a lot of conflicting data, like we just talked about. Employment's up, recession, you know what I mean? CPI is going to come out soon. Let's see what that looks like. So there's a lot of different information out right now, and it's none of it's clearly pointing in one direction, and that's a big reason why the Bank of Canada is not going to do anything tomorrow. And I'll absolutely eat my words if that's untrue, but I think a lot of people will, because no one's expecting any changes tomorrow. I think the current odds of a change are like single digit percentage. So very, very unlikely that we're going to see that tomorrow.
Very, yeah,
Last,
very well said.
yeah. Last thing here, because we usually talk about rates in this. If I had to summarize this in about one sentence, variable rates still continue to outperform fixed rates. That I'm just going to leave it there. That continues to be the trend. And there's reasons why it makes sense for one or the other, but that's where we're at right now. Variable rates do continue to outperform fixed rates if you're looking for the lowest rate. Leave it at that. Sound good?
Yeah. Yeah. Well, it's funny because I think this was also something that was chatted about at our office meeting today. Like historically, that's what you see is fixed rates, or sorry, variable rates outperforming fixed rates.
Mm-hmm.
A lot of like first time home buyers, they typically just lock in for 5 years fixed. I think that's pretty common of what you see. And maybe that's just
Mm-hmm.
understanding like how it works necessarily. With that being said, there was also, 3-4 years ago when rates really, climbed. I think that spooked a lot of people. So it'll be interesting to see how long that lasts for until people start going variable again. So it's curious to me.
Yeah, like how long it takes for people to forget about it. To be honest with you, Austin, it's probably going to be some of those people that didn't deal with that. I've had some conversations just last week with people that went through that and I actually personally did too, and I'm happy to speak to that. That wave that was variable rates going up and then significantly now coming down. It was not fun, to be honest, and it scared a lot of people away from variable rates, but the people that had variable rates before that and saw the benefit will likely continue. The people that their first mortgage was during that time of variable rate, they're going to have a much harder time being like, yeah, I think I'm going to do that again and see what happens because that was a fun
Yeah.
time, you know? Like I don't know how many of those people are going to be as confident. Their financial position definitely will impact that as well as this is something I have a conversation with all these people too is there's two different types of variable rate mortgages. There's one where the payment doesn't change, there's one where the payment does. Either one can be better for a number of factors, but for those people that are like, "Hey, I really can't afford more than this, but I want to take advantage of the lower rate right now," maybe they go into a static variable where that payment really is not going to change unless their interest rate goes up to more than 2%. So if the Bank of Canada raises rates more than 2%, which again, we saw that happen, but it's unlikely we would see that happen again. And those are the people that could take advantage of a variable rate knowing that their payment won't change. Yes, it will impact how quickly they're going to pay off their mortgage, but it won't hurt their bottom line, which is their monthly cash flow. So something to definitely consider. And that's a conversation to have with people as well. Cause we can really truly look at both options there.
Very well said. All right, let's hop into the stats package.
All right. Give us a headline.
Falling prices open the door for Fraser Valley move up buyers.
This is interesting, Austin? I
Have we
feel like
have we
we've
talked
talked
about
about this
upsizing?
before.
Yeah, have we
Did
talked
we
about upsizing?
did we write in to suggest a headline on this one? Because I feel like that's something we've talked about once or twice.
The Fraser Valley Real Estate Board must be avid listeners of the Full
Yeah.
Self.
They're
That
our
must
number
be
one
what that must
subscriber.
be what it is. Yeah.
Yeah. Sponsored, I
So
guess.
yeah, can you imagine? Brought to you by the no, never mind. Not gonna say that so we don't get clipped. Okay, let's talk about key talking points here or
Cool.
kind of key points from the
Yeah.
stats package. So, are we finally seeing the market conditions that move up buyers have been waiting for? We've been seeing these for a while.
I agree.
But to kind of hop into some of the, key stats. So 1,124 sales in May. So
Mhm.
sales were up 0.5% from April. That's good.
That's
Down
good.
about 5% from May of 2025. That's bad.
Mhm.
But activity remains steady but cautious.
Mhm.
And it didn't produce the spring market that a lot of people were anticipating. I think if we were to go back to our predictions episode, we predicted, I believe, that it would be a little bit of a slower year compared to others. So that doesn't really surprise me. It's still been fairly steady. It really just
Yeah.
depends on the product and the price. And, but we've always said like well marketed, well desired, well priced homes will always move. It's just about being in that sweet spot. I can share I've been in multiple offers a couple times recently. And again, that isn't 4 or 5 people. That it doesn't mean that it's selling for 100K over list and there's 15 offers. It means that there's 2. And then typically the person that goes to sticker price ends up getting it or maybe slightly over, or maybe you have better terms. Obviously, there's more that goes into it in price. Maybe it's dates, all that kind of stuff. The big takeaway, though, is there are people that are moving in the market. It's not frozen.
For sure.
The market is not one giant bowl. It is a bunch of micro markets, and there's some stuff that is moving very well, and there are other product that is not moving at all. buyers are taking longer to make decisions. They're more selective. You're able to view places 2, 3, 4, 5 times if you want to before writing an offer. And maybe there is more stuff to choose from. But again, it really depends on the product and the price. Like, in Langley, what we're seeing is like 2-bedroom condos under 600K are a pretty hot
Mhm.
product. Detached houses with a suite under 1.2, really a hot product. 3-bedroom townhomes under 800K, very hot product. And then conversely, you're also seeing products that are very slow. So like, somebody in our office today was talking about how like acreage is super slow right now. Like
Mm,
4% of homes over 3 million are selling. And
okay.
it's interesting. Somebody else was, during this discussion was saying it's a lot cheaper right now to buy as opposed to build because like you can't even replacement cost build the type of stuff that is selling. So again, depending on the product and the price point, there's some deals to be had out there. And again, obviously there's a smaller pool of buyers that is purchasing in the 3 million range as opposed to the
Mhm.
1.5 or 1.2 range. But there's certain products that are moving well, and certain stuff is definitely having more challenges.
Yeah, very, very well said. And I think something else that's interesting is I don't have stats on this, and this isn't part of our stats package, but I still don't think we're seeing the amount of first time homebuyer activity that we could be seeing if more people realize the opportunity that is now. So I think the theme really today is the fact that we're seeing a lot of move up buyers. And what that means is we're seeing sales and then they're also transacting on a purchase. But from the first time homebuyer perspective, I still think we're seeing not as much activity as we could given the opportunity. And it's interesting because we've had this conversation before too, Austin. When you compare prices now to what they were in 2021, 2022, when a lot of first time
Mm.
homebuyers were getting into the market, and yes, rates were a bit better at that time, but we've done the math. We've talked about this many times. It is still better to buy now. You're buying at a lower price point, and your mortgage is not the rate on your mortgage is not something you're gonna have forever. The price you pay for
Mm.
that property is the price you pay for that property, right? That's how much you're paying for it now, and in the future, if that goes up, you're gonna realize the gains from that. So, I think there's a lot to be said about that, and I think it's important to remember that crowd mentality often does drive the market, but it's usually better to do what the opposite of what the crowd's doing, especially when we're looking at first-time home buyers as an entity within the market, because there is a lot of opportunity for them. And I know, again, we're talking about move-up buyers here, but it's interesting that we're not seeing, or at least I don't feel we're seeing as much activity on that front as we could, given the opportunity that is right now.
At our one of our previous office meetings, and I'll see if I'm able to upload this graphic.
Sure.
I believe I took a photo of it. But right now, like it's more affordable to buy a house than it has been previously. Like especially when you're comparing to some of the other
For
markets, when
sure.
you look at price point as well as interest rate. Basically, the graphic that they had showed was that it was like 23 or 25% cheaper or more affordable when you
Mhm.
look at monthly payment, required down payment right now compared to what it was previously. And like that's a lot. That's a
It
quarter
is a lot.
to a fifth, like, a fifth to a quarter cheaper, or more affordable, I guess I should say. So that's one comment. I'll see if I can edit that in. But my question for you, based off of what you just said, is why do you think that more first time home buyers aren't getting into the market? Like, I know there's been articles that are out talking about like, you know, uh, unemployment rate for youth and like the 18 to 24 generation is their unemployment super high right now. And
Mhm.
there's different reasons for that. Do you think it's just people don't have the money to get into the market, or people just waiting more? Like why do you think the more first time home buyers aren't jumping at the opportunity?
I don't I have a hard time believing it's not the money to get into the market because the first time home buyers that are going to get into the market are going to get into the market anyway. They're going to have a source of down payment one way or another. Either they have that down payment themselves or they're going to get some help from family.
Yeah,
We,
good
we've
job or bank of mom and dad. Yeah.
yeah, we've seen that because of the fact that home prices still are high relative. Like we're not taking away from that, and it still does require a substantial amount of money just to get into the market. Now, I mean, getting in for as little as 5% is still possible for many first time home buyers, but it doesn't mean it doesn't come at any cost. So I don't know if that's the issue because we were seeing people get we're seeing a lot of first-time home buyers get into the market back in 2021, 2022 when prices were higher, when down payment requirements were higher. Now, I understand that it's harder to save money right now because things cost more. So just because you're slowly getting a 2 wage increase every year, that's not keeping up with inflation and that's not allowing you to save that money. But I still don't believe that's the strongest factor. I think it really comes down to like mindset and really it comes down to whether or not people are ready for that given the noise and uncertainty that they're hearing around them
Hmm.
because maybe their friends aren't doing it. It doesn't make sense for them to do it right now. And it goes back to
Hmm.
that crowd mentality of, hey, all my friends are getting their first place. Maybe I should look at doing that. And people aren't having those conversations. Is there an argument that, hey, rent prices have come down a little bit and maybe people are arguing, hey, you know what, I'd rather just rent right now because prices have come down? I don't know about that because I feel like rent prices are still relatively high. And if you were to do a comparison of, hey, what can I get for rent compared to what can I get to get into a place and how much would that cost?
Still
It
pretty
would,
comparable. Like, yeah, you're
yeah,
probably spending
comparable.
500 to $800 more a month, but it's yours to
But
buy.
it's going into it's going into your investment or into your property that is eventually going to appreciate and going to be something that you can take equity out of in the future. So, honestly, I think it really does come down to the psychological side of things more than anything else. Would you agree, or do you think there is something that's a stronger argument there?
No, yeah, I mean, I still think that a lot of people like we've talked about for a long time, and this is just our opinion. Like a lot of people can afford to make the mortgage payment. They can't. Like it's the down payment that is the challenge.
It is. Yeah,
Yeah,
I wonder if those, because I mean, you have to imagine too, like if you're getting the money from bank and mom and dad, are mom and dad now struggling and they don't have the same willingness to offer that money? I don't know. I'm having a hard time with that one, but if it's strictly from a buyer being able to save the money themselves, and let's say they've been saving X amount for how many years, and all of a sudden things are getting more expensive, so they can't save as much, then yeah, I think that argument's valid. But when the market is hot and people want to get into the market, they find a way to get into the market.
totally. Yeah,
So that's why I'm having a hard time with that argument because I think people are resourceful. And if they did want to come up with a down payment, they would find the way to do it. And now that might sound a little bit harsh or superficial, but that's my opinion. And I think
mm,
that we will see that if the market does pick up, more first time home buyers will find ways to get into the market that were always able to, they just it wasn't the right time for them, emotionally or psychologically.
yeah. Very very well said. Let's speed run the rest of it because we're running a little bit long here.
Yeah, for
Want
sure.
to keep it
Let's
to
just
around
talk numbers
half an
here.
hour. Yeah. So active listings are sitting at over 10,000 right now. So inventory is still very high. I think there is a disproportionate amount of different inventory. Ton
Okay.
of ton of 1 and 2 bedroom condos right now, and that is
Mm,
also stuff that's having more challenge being rented. Yeah, I mean, everything is going to be up slightly, but I just think there's a lot more of that inventory, especially in different areas. Again, that's just my opinion. Yeah, and again, when you're navigating the market, like there's also just a bunch of crap out there. And I know that I
always.
don't mean to talk negatively about people's houses because they're people's houses and it's their homes and all that kind of stuff. But this is not the market where you put your sign in the ground and you have 300 people through the open house and it's like a live auction. This is like you have to make sure that you're presenting a good product and showing well and cleaning up for your showings and clean your carpets, wash your walls. It just make it look like you're proud to live somewhere. It sounds really funny, but like people get a feeling. And if you're not going to put the effort into that, they're going to go buy the house of somebody else that does. So,
100%. If you're one of
so yeah,
10,000, you gotta find a way to stand out. I mean,
yeah,
obviously,
exactly.
not all
Right.
10,000 are the same product, but I mean, really, when you look at it that way, there's a lot of competition out there. Okay,
10,000
Austin.
active listings, 1,100 sales. How do you be one of the 11% of success, right? Think about
Exactly,
it that
and
way. Yeah.
that's a great segue. So Austin just gave us the next number. 11% is our sales to active listings ratio here. So that still puts us in a buyer's market. We're below that 12% threshold. I don't think there's much to say there. I think that's pretty straightforward. I think that's what we were expecting. We've seen it bounce
Mhm.
up into a balanced market, I think 1 month, but that doesn't really say much in my opinion because month over month inventory can come down, sales can be a little high, and that's going to shift that. But it makes sense that that's where we're at right now. I think that's what I
And
would
like
say.
we've talked and like we've talked about too, there are certain markets that I've seen at 24, 25%,
Hmm.
townhomes under a certain number, et cetera, et cetera. So that is just the gist of like everything. But there are certain products that are, really hot. And then like I talked about, like Langley acreage right now is selling at like 4%. That's
Yeah,
really low. That's really slow.
really
In
slow.
comparison, right? So, if you're a buyer, how do you take advantage of a market without trying to like perfectly time the bottom? Again, if it makes sense for you now to move, get a bite on your sale, and then you can shop around a little bit and have some time and be effective that way.
Hmm.
Prices, we've seen those still slightly fall. So benchmark price on single family detached is down to 1,366,500. So again, you're looking at about 0.6% from April, sorry, and about 8% year over year. Townhomes are a little bit smaller than that. Townhomes, again, are always a great product. 0.3% down relatively,
Hmm.
7.6% year over year. And then condos have been challenging. So that was down about 1.5% from April.
That's a big
And then
jump.
yeah, and then 8.8% year over year. And like I talked about, 1 and 2 bedroom condos really struggling right now. And, another way to think about this, if you're dropping a 1.5% and your benchmark price is 483, so let's just round just for simple math. Let's say that was 500K. And let's say, at 2% of that, 2% of 500K is going to be what? 10
10
grand?
grand. Yeah.
Yeah. So if you think about it this way, 30 days in a month, 10 grand a month, if you're resisting a price adjustment on your condo that you have listed, and you really don't want to drop to the number, helping out some of the other agents here. Maybe your agent's bugging you, you're listening to this and you're like, oh, he wants me to drop to X price. But I don't want to do it. I want to leave room to negotiate, or I want to get as much money as possible. If prices are dropping roughly 2% a month and the benchmark price is 500K, but it's actually less than that, it's costing you $300 a day, $333 a day, every day that you don't make a change. So every morning you wake up, that little sound effect of money flying away, like the cha-ching, but the opposite. That's what it's costing you every day that you don't sell. And it sounds awful, but that's the truth when you see numbers and stats like that. So that's us being prescriptive with like, that's the numbers, that's the stats, but that's the actual like, result of it. I think that's super effective to think about.
100%. And that's not and Austin's not telling you every day you should wake up and go, "Okay, I need to drop the price. I just
Yeah.
lost $100." That's not what he's trying to say. You don't need to drop the
Yeah.
price every day.
So much paperwork at the board. They're going to hate me.
Yeah. Oh my
But
gosh.
no, but like, it's something to think about. It's so common that people think of like room to negotiate or et cetera, et cetera. If you're priced right, you will still sell quickly.
Yeah. Well said. All right, last stat we're gonna throw at you guys here. Days on market. So these are averages, remember. So you need to take this with a grain of salt. Detached homes, 35 days, so 7 weeks. Townhomes, 37 days, so just a touch over. Sorry, did I say 7 weeks? I meant 5 weeks. Townhomes, just over 5.5, or just about 5.5 weeks. Condos are just under 6 weeks right now. So there's not a lot to say about that. It's going to take a little bit of time to sell your place. I think that's pretty obvious at this point. That doesn't mean everybody's place is going to take that long. Obviously, like I said, it was an average, but don't be expecting that you're going to list your place and it's going to sell the same week. Does that happen? Yes, it does, Austin, but it's not the norm. It's not what you should expect. As Austin said, you can't just throw a sign in the ground and expect 300 people to through your town, or sorry, through your open house.
Hmm.
That's not the norm right now. So manage those expectations, find a professional like Austin that can help you manage those expectations and create realistic, I'm going to say the word expectations again, about what is going to happen with this. It can become very emotional, but we need to try to take as much emotion out of it and make sure we're making the best decision for ourselves when it comes to that. So anything you want to touch on there, Austin? If not, we can wrap things up here.
Yeah, no, I think that's really good. We should maybe have a secondary episode on the stats. I would love to dig in some of the snap stats, which is basically it's a little bit more detailed to talk about all these micro markets. I think that would
Yeah,
be
yeah.
super interesting for us to nerd out on. But for now, we'll sign off. Thanks for listening to another episode. As always, if you listen and you're not subscribed, how dare you? That hurts so much. And of course, leave us a 5-star review. We do appreciate it. Couldn't get through an episode without some sarcasm. So we will see you next week.
Take care, guys.